Today, we are taking a deep dive into Zaggle Prepaid Ocean Services. Now, if you've ever wondered how huge companies keep track of all their spending, we're talking everything from employee travel to massive rewards programs, then you're going to want to stick around. Zagle is a really big deal in this space in India, and we're about to break down its entire business, piece by piece, from how it makes money to its pretty ambitious plans for the future.
All right, so here's how we're going to tackle this. First, we'll get into the basics of what Zagle actually does. Then, we're going to follow the money to see exactly how they bring in revenue. After that, we'll pull up their latest financial report card, see what's really driving their growth, and finally, we'll look at what the company's leadership is promising for the road ahead.
Okay, let's start with the big picture. The easiest way to think about Zagle is like a financial control tower for businesses. They build the software and the tools that help companies manage and track every single dollar they spend all in one place. The whole idea is to take a really complex process and make it way simpler and much more efficient.
So what's actually under the hood here? Well, at its core, Zagle has built what they call their spend management architecture. I know it sounds a little jargony, but it's really a powerful mix of three key things: software as a service, prepaid cards that employees and vendors can use, and a whole reward system. The real magic, though, is how it's all integrated into one platform to handle pretty much every aspect of a company's spending.
And you know, this is no small operation. We're talking about a platform with over 3.5 million active users across more than 3,600 different companies. And to make it all work, they've partnered up with 19 different banks. Their entire ecosystem really runs on 4 key platforms: Save, Zoyer, Propel, and Jetix.
All right, let's get to the big question. How does Zagle actually make money from all this? As it turns out, their entire financial model rests on 3 distinct pillars.
So, these 3 pillars are, first, your classic software subscription fees. Second, they get a small piece of every single transaction made with their cards. And third, they have a really clever system for making a profit on corporate rewards, which they call Propel points. Let's break each one of these down.
So, pillar number 1, SaaS fees. This is that nice, steady, recurring income they get from subscriptions to their software. Their SaaS platform helps manage employee expenses like travel and meals. Zoyer is built to handle all the payments to suppliers and vendors. Propel is their tool for managing rewards programs. And Jetix, well, that's the brain of the whole operation, using AI to give companies some really powerful insights from their spending data.
The second pillar is what they call program fees. And here's how it works. Every single time someone swipes a Zagle card to buy something, the merchant pays a small transaction fee. Zagle gets a slice of that pie. And they've structured a pretty sweet deal where they keep between 70 to 80% of that fee, with the rest going to their banking partners. It's a volume game, and it scales up the more the cards are used.
And that brings us to the third pillar, Propel points, which is actually pretty smart. Zagle goes to big-name retailers, think Amazon or Flipkart, and buys a massive amount of gift cards and vouchers. Because they're buying in such huge bulk, they get a really nice discount. Then they turn around and sell these vouchers to their corporate clients for their employee rewards programs at a higher price. That gap between the buy and sell price, that's pure profit for Zagle.
Okay, so we've covered how Zagle is supposed to work. But is it actually delivering? Let's dig into their latest financial results, because their second quarter showed some seriously accelerated growth.
The big headline number is this: a 42% jump in revenue compared to the exact same quarter last year. I mean, that's a really clear signal of strong top-line growth and some serious business momentum.
But this is where the story gets even better. Their profitability, which we measure using something called EBITDA, grew by an incredible 65%. Now, what that tells you is that as their revenue goes up, their profits are actually growing even faster. That is the sign of a very healthy, efficient business with what we call strong operating leverage.
Let's just take a moment to look at these numbers. Revenue up 42%. Fantastic. But check out the profit after tax, or PAT. That's up a staggering 79%. That's just a huge leap. And while their user base grew by a very respectable 16%, it's obvious they are getting much, much better at monetizing the users they already have.
So, where did all this growth come from? Well, what's really striking is that it was pretty much across the board. Their rewards business, Propel Points, was the star of the show, with 47% growth. But their other 2 pillars also posted very healthy gains. This just shows that their entire business model is firing on all cylinders, not just leaning on one single area. So, the recent performance has been impressive, there's no doubt about that. But the real question is, can they keep it up? Let's take a look at what Zagle is planning to do to maintain this incredible momentum.
Management has laid out 5 major growth initiatives. They're making a big push into fleet management, they're launching new co-branded cards for everyday retail customers, they're working to get existing clients to use more of their products, they're buying up smaller companies, and, finally, they're planning on taking the whole business global.
Now, one of the most exciting new areas for Zagle is fleet management. Just think about all the trucks and company cars out there that need to manage spending on fuel and maintenance. Zagle's partnering up with major oil companies in India to crack this market, which they see as a massive, largely untapped opportunity.
And remember, it's not just about winning new customers. It's also about getting your current customers to buy more from you. When Zagle first went public, only 16% of their clients were using more than one of their products. Today, that number has climbed to 21%. That is a fantastic sign of customer satisfaction and shows that clients are getting more deeply embedded in the Zagle ecosystem.
Zagle is also growing by acquiring other companies. In fact, one of their recent acquisitions is already growing at 100% year over year. And they aren't just staying within India's borders. They've already opened an office in a special economic zone, they're expanding into the Middle East and North Africa, and they're even starting to explore the huge US market. They are definitely thinking big.
Finally, let's look at what the company's own management team is telling investors to expect. This is where you get a real sense of their own confidence in where the business is headed.
And all the signs are pointing up. Because of their recent strong performance, management has actually raised their official forecast for revenue growth. They were originally guiding for 35 to 40% growth, but now they're telling the market to expect something more in the range of 40 to 45%. That is a very, very strong vote of confidence from the inside. Now, for any fast-growing company, managing cash is key. So Zagle has laid out a clear roadmap here. They expect to stop burning through cash or reach cash flow neutrality by the second half of fiscal year 2025. And by 2027, their goal is to be consistently generating more cash than they spend.
Looking even further down the road, Zagle has set some incredibly ambitious goals for the next 4 to 5 years. They want to expand their profit margins from around 11% to about 15%. They plan to build an entirely new retail card business from the ground up that brings in 500 to 600 crore rupees a year. And they want to establish that fleet management division as a major new pillar for the entire company.
So, there you have it. Zagle has a solid business model, some truly impressive growth numbers, and a clear, ambitious plan for the future. The big question now is, can they execute? With so many moving parts, from acquisitions to global expansion, everything is going to come down to execution. It's a fascinating company to watch, and the next few years will really tell the tale of whether they can become a true giant in corporate finance.